Good afternoon, everyone. Welcome to today's market review. My name is Stock Darts, and we're going to do what we always do on Wednesdays. We're going to go ahead and take a look at the four major market indices. We're going to look at the NASDAQ Composite, the Dow Jones, the Russell 2000, and of course the S&P 500. If you like what you see here, you can always follow me on Twitter under the name Stock Darts. You can find these videos at YouTube under the same name, or you can visit me at patreon.com/StockDarts, where I post weekly blog content, including weekly trade ideas, watch list ideas, and anything else, generally speaking, that involves how I approach trading. We also repost these videos on there as well. So it's kind of the perfect place for you to go ahead and take a look if you're looking for more content from me. Let's go ahead and get started. First thing we're going to do is take a look at the S&P 500 through the ETF SPY. As we can see, the market has done pretty well. And we're going to see a little bit of a discrepancy between what we're seeing on the S&P 500 and the NASDAQ compared to what we're seeing in the Dow and the Russell 2000. But overall, it looks like the market has reacted well to the consolidation range that we spent the last couple of months in, and are in the process of breaking out. We're also in the middle of a sector rotation back into tech names, and that has fueled a lot of the price action that we've seen in the last week and a half or so. And it will be interesting to see just how long that continues, and whether we'll get another rotation back into or out of tech and into some of the recovery names that are starting to take a hit, which of course is part of the reason why the Dow has been underperforming, as well as some IWM and some small cap names. Now, before we get into those though, let's just go ahead and take a look at the S&P 500 and just kind of judge the market from the bigger picture, looking at the ETF that probably represents it the most, or the most closely, and that of course is the S&P 500. And as we can see, we are at new all-time highs. We printed new ones yesterday and are pretty close to new ones again today. Volatility has died down as we've just sort of kind of drifted upwards, and I would say at the moment this is not a very convincing breakout. As you'll note, we have volume kind of decreasing as we kind of make our way upwards, showing that it's not a full-fledged, really strong beginning to a new rally in the market. However, it is still a positive breakout, and it's still working pretty well. If you'll note, the last time we broke out, we also kind of started dropping in volume as we drifted upwards, and that didn't really cause a top or a rollover. If anything, we just slowly drifted up into a sideways range and traded sideways, and I suspect that that's going to be very similar to what we're going to see now, where we kind of stair-step upwards and continue this process that we've done over the last 5 or 6 months now, which is we've maintained this upwards bias, but we've spent a good portion of these times consolidated, even if it doesn't look like it at first look. As you can see, I already had a rectangle pointing out the last time that we had or the first time that we had a nice consolidation range. But we'll draw another one now, and I'll show how we just exited another pretty decent long range or long-term consolidation range. Well, I'd say more, I guess, intermediate term, right? Because it's only been a couple of months. But depending on your time frame, you can look at that as a longer-term consolidation or shorter term. But as far as what we're looking at, just looking at the price action for the last 7-8 months now, this is a good chunk of that time, the last 2.5 months, where we've just traded sideways. Now, the bigger picture is still up, and we're still trending nicely. You look at the moving averages, they're still sloped upwards. You still got the 20 above the 50, above the 200. And so, overall, everything is still showing a pretty good rally, and a pretty good market that's just kind of climbing upwards and trending upwards. But in the smaller time scales or the smaller time frames, you can see that we have been kind of trading sideways, and the market has been chopping around a little bit as it makes its way upwards. And so I suspect that that's what we're going to see again, is we'll kind of build up off of this and make another stair step up and start to work on that case. And if that's going to be the case, then we likely will hold above 422. I think that's going to be an important area for us to watch now. Clearly, the 20 and the 50-day moving average, which are still pretty close to price, are also going to have an impact, and I think are going to be good areas to go ahead and try to judge the health of the overall market. As long as we stay above them, obviously things are looking good. If we start to break down below them, it will depend on when that happens, right? If it happens over the next couple of days, then that's a bad sign, because that means that we broke below 422, we broke below this trend line, and we're heading right back into that range that we just exited. If it happens 2 weeks from now, as we've made our way up into the 430s and then come back and retest the 420s, well, then it's a positive, and it's not going to be anything really to get too worried about the market, because overall we'll still be kind of moving forward and continue to build upon the price action from the previous months. And so I think that's going to be one of the big gauges that we kind of want to go ahead and use to evaluate exactly where we stand in the markets is how we handle the next pullback and where we go to. Now, as you can see, we're still pretty close to what was the previous resistance, which should now act as good support and our next floor, right? 423, we're only about 5 points up above that. Not sure when we're going to pull back. We could pull back in the next couple of days, or we could wait maybe another week before we pull back. However, when we do pull back, we want to stay above this range, and I think that's kind of one of the big keys is if we do drop below it, it's a quick and temporary drop, and then we make our way back above it. As you can see, the last time we kind of broke out, and we never really came back and revisited the previous range, and that is usually a good sign of a strong market, is when you leave these ranges behind and you don't even come back and revisit them. Now, I still think that price action is eroding in the intermediate to longer term. We look at what we've done in the last year and a half, 2 years. Since the coronavirus drop, we've had an almost completely uninterrupted March, right? We've had, I would say, maybe 3 strong areas of sideways consolidation, right? With the first one being this one that occurred at the end of 2020, before we had that nice rally that closed out last year and started this year. And as you can see, we had one big sideways range. We kind of climbed up, did another sideways range, climbed up, did another sideways range, and now we're climbing right back up. The key here is how long can we continue this climb without really turning sideways and really just kind of going into more of a broad range consolidation. When we get to the NASDAQ, you'll see that that's what has actually already occurred, but it has not happened with the S&P 500 yet. And with the NASDAQ kind of regaining strength and looking like it wants to move past that, there is the possibility that it takes the S&P 500 with it. And if that's the case, then it'll be a little bit longer before we see one of those broad range sideways consolidation price environments that would likely mean the end of this rally and a much more neutral environment with a lot more back and forth trading rather than what we're getting now, which is pretty steady rallies. Now, those of you that are regulars here, you'll know the last few weeks have been kind of tough for traders, but things have picked up over the last 2 weeks, really, as we started to break out and as money started to rotate back into the tech names. And a lot of trade ideas are starting to work again. Now, the one issue we have is they've been working for about a week and a half, 2 weeks now, which means the risk reward is becoming harder and harder to find because of most stocks kind of running up into highs. And the ones that are not running into highs are the ones that money rotated out of, and they are kind of struggling and not really producing productive trading scenarios at the moment. And so as far as our overall trading process and how we want to go ahead and approach the market, I think that we're still in a spot where we want to be a little bit more cautious and a little bit more disciplined about how we trade, because I don't know that we have a convincing enough breakout here to really get fully behind an aggressive trading strategy of just trading on high volume and high quantity. I think that we're still looking at and still playing the rotation game and still trying to pick our spots as far as what we want to go ahead and take advantage of. Alright, so let's look at a couple of key levels on the S&P 500, which we've kind of already outlined, and then we'll move on to the next chart, which is going to be the NASDAQ. Now, I think the key area, as I mentioned before, is going to be 422, this green trend line. We want to stay above it. If we fall below it, it needs to be a very temporary pullback and then a move right back above it. If we fall back below that, we're likely going to break below the 20 and the 50-day moving averages, which means that we're going to roll over and head right back into this range that we've been in since the middle of April, and likely mean the end of this intermediate term rally that we've been experiencing since the holiday season of 2020. And likely means a move all the way down to the low 400s and possibly even a little bit below 400. Now the really strong support area that I do not expect to be breached anytime soon is going to be right here below 400, around 397, 398, which again is the other sideways range that we really experienced this year, and has become a pretty good floor for the price action. As you can see, we haven't even come up and tested it since we broke out above it. So that's going to be the key area. Now, to the upside, we're at all-time highs, or very close to all-time highs. So there's really no resistance I can point out, other than making sure that we don't maybe accelerate past the top of this channel. If I extend it, you can see where we've got plenty to go before we have to worry about that. All right, if we take a look at the Nasdaq, you can see again this is actually the source. Or at least the main source of strength that we've seen in the markets over the last week and a half, 2 weeks, and actually a little bit further if you really think about it. We've started basically at the start of June. So for the last month or so, the Nasdaq has been really starting to regain the strength that it maybe had towards the end of last year. As you can see, the Nasdaq has been trading sideways for a much longer time than the S&P 500. And even that range that we spent in the beginning of the year, we actually came back and retested it, showing that there was a lot of relative weakness in the Nasdaq, even if it was not reflected in the S&P 500. As you can see, we kind of rallied upwards, but we failed pretty quickly. We came down, we tested below the 320s, headed into about 315, 316, and then finally made our way back up above it. And then that's when we really started to pick up some strength, and it looked like money was starting to rotate back into tech. Now again, if you're a regular here, you'll know my interpretation of this, which I think was pretty accurate, which was that money was rotating out of the tech names that benefited from staying at home, and into a lot of recovery names that benefited from us going back out into the workplace and back out onto the road. And what we're seeing now is those names got beat up for a while, and they're starting to recover after dipping for a while and after kind of trading sideways for a while. And so this often happens with rotation. You have areas that rotate out, and then eventually you're going to have money rotate back into them once they come back down to value areas. And that's indeed what happened with the tech names, is they kind of came back into what would be considered to be good value. And you had buyers step in at that point because they were happy with the prices that were coming in. And so from there, we've kind of rallied, like I said, and made our way back up to new highs. I think that this is going to be the leader for the near future. And if you're looking for trades, I think the focus is on tech right now. I think that we will probably in the next week or so start to focus on some of the names in the recovery area that we've seen rotation out of. But for now, the focus has to be on just kind of keeping up with the momentum that's coming into the tech names and seeing exactly where we go forward. Now again, just like the S&P 500, volume has not been that great when you consider the fact that we're breaking out to new all-time highs. It's not always an issue. You don't always need strong volume to accompany a breakout in order for it to work. And a lot of times as stocks drift upwards, it is on lower volume, and that's not normally a big issue. Volume a lot of times accompanies volatility. And the fact that we've had low volatility is not necessarily an indictment on this rally. So I think overall we're still fine here, but it is a little bit of a concern, and I think more than anything points out to the fact that we're likely going to stair-step upwards, like I mentioned when we were looking at the S&P 500, rather than maybe have an uninterrupted climb upwards like we did to close out last year and start this year. And it's going to be probably a little bit more of just kind of going back and forth slowly upwards. And again, that's not necessarily a bad thing. It gives a lot of traders opportunities to get in if they miss the original surge upwards. So if that's the case, what's going to happen next? We probably pull back. Ideally, with the Nasdaq, we pull back into the 20-day moving average, find support, and then make our way back up towards whatever highs we printed before we pull back. The key here, more so than even the S&P 500, is that we maintain the price action above this green line, which was the previous level of resistance, which was the inflection point that we've been watching for the last month or so. which was was the market going to be able to push to new highs and break out through the ceiling? There was a lot of supply and a lot of selling pressure in this area, and the fact that the Nasdaq has broken through it has been a real good positive, and has been a really good development as far as the potential for further upward momentum in the market. So if that's the case, it would be a really bad sign if we came back and broke back below it, right? So that is an important area that we need to hold above. I think that of the four indices, this is probably the critical area for all four of them. I think is the Nasdaq holding above this range. If the Nasdaq falls back below that, unless it is a sign of a very strong rotation back into the Dow Jones, I would suspect that this would be the end of the rally and the start of a much more volatile correction. So we don't want to see that happen in the near future. Now, of course, at some point it will break, and when that does, depending on the price action, maybe it'll be significant or not. But if from here to next week, or even from here to the next couple of weeks, we break below this, then that's a poor sign, and that likely means that we're seeing a much more volatile environment, and one that is probably more conducive to stronger pullbacks and stronger price corrections. So for now, we want to see, again, I think of the four indices, this is the main battle line that we want to watch, and have the bulls defend if you are bullish this market. If you're bearish this market, then obviously you want that to break. If it does break, where do we go? Well, we're likely going to find support real quick at the 50, depending on how quickly that happens. But my suspicion is we'd have to come all the way back down and retest this 324 area, and likely test the 200-day moving average, and then see what happens from there. And it would probably happen pretty quickly, because again, to get down to there would be a pretty volatile move, and to break through it would be, again, a very volatile move that we would not really anticipate at this point, which would mean that it would likely be due to either really negative news or just really market conditions that have deteriorated very rapidly. I don't expect that to happen, though. Like I said, I think that more likely than not, when we correct, which is probably pretty soon, we're likely going to just come up and test the 20, find support, and then maybe drift back up and retest the highs, and then from there decide whether we're ready to push the new highs or start kind of backfilling and then coming back and retesting this 342 area. So, in a nutshell, the Nasdaq is the place to be right now. We pointed out last week that a lot of the FANG stocks were starting to recover and show some strength, and I think that's clearly reflected in the Qs and in the Nasdaq composite. And until we see something different, that's an area of the market that we probably want to focus on. Now, in direct contrast to that, we have the Dow Jones. Now, it's not a negative chart. It's actually still positive. It's just negative when you compare it to what the S&P 500 and the Nasdaq are doing. I think overall we had a really positive breakthrough with the Dow Jones last week, which was to be able to get back above this 340 area and to get it back above the 20 and the 50-day moving averages, which is really what it's been doing all week, is just making its way and holding above that. And right now this is actually a pretty positive sign. I'm going to go at a pretty positive development. I'm going to zoom in a little bit here. As you can see, much like the S&P 500 and the Nasdaq, we've been consolidating and trading sideways for a while on the Dow Jones. And just like the other two, we had a really strong inflection point coming, which was, were we going to break to new highs or were we going to come back down and retest the lows? And while the Nasdaq was able to break out to new highs and the S&P 500 was able to peak out through new highs, the Dow Jones did not. And we had a rotation out of a lot of the Dow sector names and back into tech names, and that led to this pullback. As the Nasdaq was breaking out, you can see the Dow Jones rolled right over and broke below the trend line that was a pretty good indicator of support for it earlier in the year. As you can see, the Dow has been in a pretty good channel. It actually accelerated and got above that channel for a while before it kind of finally died down and started trading sideways. Now, we had a breakdown, and so this was a negative development. Even as the Nasdaq was breaking out, the Dow Jones was breaking down. And so what I mentioned before was, this is actually positive. We were able to have a false breakdown and get back above that trend line, get back above the moving averages. So this is actually pretty bullish if you don't compare it to this S&P 500 and the Nasdaq. Unfortunately, the Dow Jones isn't an index that we trade in a vacuum. We trade it compared to what it does versus the other indices, and so it is still showing relative weakness compared to the other two. However, if we were just looking at this chart, this is actually a real positive development because we're able to stave off a breakdown and get back above not only the channel, the bottom of that channel, but back above our moving averages. And so at this point, it looks like the Dow wants to try to make its way back up and test the upper ranges of its limit. And so the key is going to be, how did the S&P 500 and the NASDAQ respond right now to the new all-time highs? If they stall out and they start to pull back, then we're going to see the Dow Jones likely fall back below its moving averages. However, if the S&P 500 and the NASDAQ continue to kind of drift upwards on low volume or even drift sideways, then we have a little bit of wiggle room here for the Dow to try to make its way back up into the upper 340s and possibly even into the 350 area. And so that's going to be the key here. Now, am I expecting a lot out of this? Not really. Until we see money rotate back into the Dow names and into a lot of the recovery names, I expect the Dow to underperform, which means it might drift upwards a little bit, but probably not have a full-fledged breakout. Once we start to see momentum really come back into those names, then we'll see the Dow start to participate and get back above it. So for now, more than anything, I'm just kind of putting a watch list together of some names that have pulled back quite a bit over the last couple of weeks, looking at Dow components, and I'm waiting for reversal signals on a lot of them, or signals that the buyers have retaken control. And at that point, once I see enough of those do that, then I think that'll give us a good idea of when the Dow Jones is ready to recover, make its way up. Now, as far as judging the overall market strength based off the Dow, I don't think that the weakness in the Dow we're seeing now is enough to really indict the market and be nervous about it. I think, like I said, that the weakness we're seeing here is more indicative of sector rotation than anything else. So I'm not particularly worried that I'm seeing this sluggish action here. And until I see a real breakdown, I'm not going to worry about the Dow Jones. Now, if we do get a full-fledged breakdown and we start to trade below the 330s, then that's a problem. That likely will occur with a stronger pullback in the NASDAQ and the S&P 500, and so we'll have a clear picture of what's going on. But other than that, this is an index that I'll just watch to see what it's doing, but I'm not overly concerned with what it does right now with its moving averages or the bottom of this channel. I'm more concerned with what happens at the extremes of this range, either all the way down in the 330s, the low 330s, or as we start to approach the upper 340s and the 350s. And then finally, the last index we want to look at is the Russell 2000, looking at IWM. And as we can see here, a lot like the NASDAQ was earlier this year, the Russell 2000 has been trading sideways for a while. So unlike the S&P 500 and the Dow Jones that have kind of held their rallies as long as possible, as you can see, we had a strong rally last year and the start of this year, but we quickly started trading sideways. And so the key here is IWM and are the small caps ready to break out and ready to follow the NASDAQ upwards to new highs? It looked like that might be the case. However, over the last few days, we've kind of pulled back, and it looks like maybe we weren't ready to really push through the supply levels that are overhead and get a nice big breakout. Now, I think it's building up, and this, I think, would be a good sign as to the strength of our rally. If IWM could start to participate, I think that would lead to a bigger move through the S&P 500 and the NASDAQ. If IWM still is sluggish as it tests its highs again, that should lead to more sideways price action and a longer, slower stair-stepping upwards that would occur rather than a stronger rally where we maintain a channel similar to what we saw in November, December, January. All right. So the key here is right around 233, 234. Oh, let's do that again. All right, so I think that's kind of the important area. It could be a little bit above it, a little bit below. You can see all-time highs are probably closer to 235 than they are to 233. But our recent highs are probably going to be important, and I think if we could push through those, we're likely going to push through the highs that we printed back in March. So this is really an important area for us, and it's going to be the very critical zone, I think, for the immediate future of the market. More than what we're seeing in the NASDAQ and the S&P 500, if we're looking at bullishness and looking at an extension of the current rally, I think we would probably want IWM to participate, which means we need to hold our 20-day moving average and break back above that. Now, like I said again, the real negative marker that we want to watch is what happens with the NASDAQ around 342, which is a pretty far a ways away from now, so we don't have to worry about that. To me, this is the biggest tell if our market is switching to a more negative environment, is if we break below here. Now, like I said, the tell for me as far as getting a much stronger bullish environment would be if IWM could participate and break above 233. So those are the two spots that I'm watching with the most interest as far as trying to gauge how strong or how weak our price action is going to be in the next couple of weeks. If we see IWM bounce off of the 20 or the 50 and then once again stall out as it hits the 232, 233 area, there's a good chance that means the S&P 500 and the NASDAQ are going to start drifting sideways and possibly down rather than continue to kind of climb upwards. And so that's going to be the key, like I said, for the upwards bias. And then, of course, if the NASDAQ breaks down and starts to retest those levels I pointed out, we're going to see IWM break down and come all the way back down into the low 200s and possibly even break down below this pretty critical area around 208 and head back towards the 200-day moving average. So, the keys right now, I think, are the NASDAQ and then maybe the small caps. Those are the indices that I'm kind of watching the more closely for different reasons. And like I said, really watching to see how that rotation game plays out and see how the FANG stocks do versus some of the smaller caps or some of the industrial names that we see on the Dow Jones. And make sure that we maybe see how that interplay works out and whether there's going to be more rotation as we just trade sideways or if things are going to pick up enough steam for everything to move up together. And not sure where we are yet as far as how strong the move will be, but what I think we've seen is that it looks like we were done kind of correcting, even if it was mostly sideways, and want to really start testing upwards again. So it looks like the bulls are back in control, as they have been in the long term, but in the short term there was a point there where it was really looking like they were losing control. If we go back to the S&P 500 chart real quick, you can see that the bulls had regained control, but they kind of lost it here as we started to head into May. You can see we started to get more choppy. Volatility had increased a little, and it isn't until recently, very, very recently, that it looks like they've kind of regained control, and they want to push it back upwards. Like I said, the strength of this move will probably be reflected on what happens with IWM and the NASDAQ. And the same thing, if it pulls back and starts to fall down, more likely than not, it'll be a reflection on what the NASDAQ does. So the NASDAQ will be the key area to watch. Now, if we look at the US dollar, we've got an interesting development going on here, which we pointed out last week. And it looks like we're finally seeing strength, real strength come out of the US dollar. This was a big move off of the FOMC day a couple of Wednesdays ago. We had a strong rally right back up to a pretty critical area here on the UUP index, right around 2480. We consolidated for about a week, and as I mentioned last week, this was likely going to be a temporary consolidation and likely give us a bounce, which we saw over the last 3 or 4 days. And we're right back at this area and threatening to really break out and start pushing back towards newer areas on the UUP index, which we have not seen in a while, right? If we kind of zoom back out, you can see the last time we really traded in that range was at the end of last year. And that was as we were heading south, not north, right? So to be able to get back above that and hold above it will be the key. You can see we did try to break out above that in March, but it was a pretty temporary blip. We came back and we fell all the way back down to the low 24. So we're trying it again, and we'll see in this case if we finally bottomed out on the UEP index and are ready to move up, or if this is just another one of these surges upwards before we head back and start trading sideways. Now, if we look at individual currency crosses, we can see that the euro is breaking down, which of course it would be reflected off of the UUP chart, right? This is going to be inverse to that, and it's going to be a mirror image. So up is good for the euro and down is good for the dollar. So you can see the dollar pushing the euro back through a pretty key support area, right? If we get a little bit of a bigger picture of it, you can see that that was a base that it formed. And it's not the first time that it did that, but again, this is looking like the U.S. dollar has regained control, which means the euro might head even further south here. And it looks like, again, the dollar is starting to pick up some strength, and that could put pressure not only on commodities but even the stock market. So we're going to have to keep an eye on how the U.S. dollar does in the near future. Now, if we look at the U.S. versus the yen, again, strength, a breakout, looking like we want to push to new highs, has been rallying pretty steadily and stair-stepping upwards. And again, I pointed this out last week, and this looks like a pretty decent chart to look at. And then the U.S. Canadian also showing strength, again, even in the face of oil, which has not really weakened yet. And you can see the U.S. dollar finally starting to rebound a bit versus the Canadian. I think that, again, if we see weakness in oil, this one could shoot up quite a bit, right? And so I think that for those of you that are into Forex trading, this is a pair that you really want to watch, because there's a pretty good chance that we're going to see an explosive move soon once oil settles down and starts to pull back a bit. As you can see, oil has climbed pretty steadily into the mid-70s. It is struggling with the $74 area. It hasn't really rolled over, but it is starting to stall out a bit. And if we get a move from about the mid-73, 74 area down into the high 60s, that's going to put a lot of pressure on the Canadian dollar, and that should lead to a pretty good move on the U.S. dollar versus it. So, like I said, if you're a Forex trader, that's probably a pair you want to keep an eye on, and make sure that you catch momentum on it if we start to see oil break down a bit. Finally, if we look at gold and silver, we'll see a bit of weakness, which of course is going to be reflected off of the U.S. dollar strength. We're going to see weakness on gold and silver. Unfortunately for GLD, it's back below a major trend line, and is kind of right back into this corrective range. Will it stay there? Probably not. It'll probably try to break back out and get back above it. But I think at the moment this is a no-go for me, as it has been for most of the year. And the same thing with SLV. I think at the moment it's not something I'm that concerned with trading. I think that there's a decent chance that SLV could rebound here, but with the dollar threatening to get stronger, I'm worried that we're going to see weakness come in SLV. And the problem with these is because they're 24-hour markets, they get a lot of gappy price action up and down. So you could be hit like you know what we just saw a couple of weeks ago, where we had a gap down from 25 to 24. We could see the same thing happen again. So for now, I don't really want to trade either of these. I'm going to wait to see again what the larger picture is with the U.S. dollar, and then if it looks like it's another temporary blip and it starts to head south again, then we could look at gold and silver and see what we can do with them. And then finally, the last thing we want to look at is Bitcoin and Ethereum. And Bitcoin, with the U.S. dollar gaining strength, Bitcoin has struggled as well. However, it had a breakdown that could have been a false breakdown, which could lead to some pretty good momentum upwards. It hasn't really happened yet, but there is the possibility that we see some strength re-enter into the Bitcoin and into the cryptocurrency space, which could lead to move back into the 40s and hopefully beyond that. Like I said, you can see we had the high volatility breakdown. We kind of bottomed out here in the low 30s, came up, retested, and held. And then this last time we had a pretty big surge down, and we broke down below 30,000. But that was quickly met with a lot of buyers, and it was able to come right back up. And as you can see, we broke a short-term downtrend. And overall, it looks like it's bottoming out again, but we haven't seen the explosive move that you sometimes want to see when you have these false breakdowns. And so the key here is, can it get back above it? If it heads back and retests this 31 to 30, then it's probably going to roll right over and head even back into the mid-20s. So, if you're a Bitcoin bull or a cryptocurrency bull, keep an eye out on what it does here as it heads well, where it is right now, obviously, where it's trying to deal with the 20 and the 50. But if it heads back south, keep an eye on what it does around 31.5 to about 30. Because if it falls below that, there's probably a good chance that it heads well below that. And then Ethereum is going to be doing the same basic chart pattern. We had a breakdown, what looked like maybe a false breakdown, which has led into a nice little bounce over the last few days. Struggling today as it comes up against not only its 20-day moving average, but this recent floor for it, which you can see it was a resistance zone, which turned into support, and that held the support as we broke down in May. And once we broke down below that, now it should flip into resistance, which is exactly what's happening at the current time. And so, I mentioned this week, for those of you that follow me on Patreon, different ways to get exposure to cryptocurrencies if you don't want to go ahead and look at opening accounts in crypto exchanges by looking at stocks that are related to it. And most of those have done pretty well this week as cryptocurrencies have bounced. I think it's an area that there's a chance that we get much stronger price action if we could break through the overhead resistance that we're dealing with at the current time. As you can see, Ethereum is dealing with a very critical level. However, if it breaks above that, it's got free reign to come up at least a few hundred points until it gets to 50-day moving average, and more likely than not all the way back up to 28 as it comes up to recent resistance. And it's going to be the same case with Bitcoin, where if it can get back above its moving averages, it should probably make its way back up to 40 pretty quickly. Right? So that's going to be a key area to watch as well. Alright, so that covers it. If anyone in here has a chart request, feel free to type it into the chat. I'd be more than happy to go ahead and take a look at it. If you are watching this as a recording, or if you're in here and you don't want to mention or share it here, you can always follow me on Twitter and ask me there at StockDarts, and I'll be more than happy to send you a chart request through that. Real quick, I'll point out some of the stocks that I was looking at. You can look at Coinbase. This is obviously it's a crypto exchange. If you don't want to actually have a crypto account, you can always trade Coinbase as kind of a proxy for cryptocurrencies. As you can see, it started to do well as they started to bounce. Another one is RIOT blockchain, which has basically changed their entire business model to be related to cryptocurrencies. It also has done pretty well, and it had a nice little move up into the 40s, but I think that we're still in the possibility of seeing stronger moves on these if we see Bitcoin and Ethereum break through their key levels. And then finally, the last one is an over-the-counter stock, which is GBTC, which, as you can see, tracks Bitcoin pretty closely. It's an over-the-counter one, so this is not for everybody. And frankly, I wouldn't trade this if I could trade Bitcoin, which I do, so I don't bother with this. But I figured it'd be a good one to show traders that are kind of forced to trade in equities and don't really want to go ahead and start opening accounts in different crypto exchanges. So that's something you could look at. Alright, so that kind of covers it for today. Like I said, if anyone has any questions or charts they want me to look at, you can always message me on Twitter. I'll be more than happy to help you out there. And like I said, if you like what you see here, you can visit me at patreon.com/StockDarts, where I post weekly blog content, as well as you'll have the recording of these things on Wednesdays as well. Other than that, I hope you guys have a good rest of the day, and we will meet again next Wednesday.